What's up, guys? Welcome back to Everyday Money. Oftentimes you'll hear me talk on this channel about the 10% average return in the market. I'll use it kind of as a benchmark for comparison. For example, if you wanted to pay off debt versus invest money. And I frequently mention that I invest in Vanguard's VTSAX fund to give me the diversification that I'm looking for and to match that 10% return to the market, because VTSAX is an index fund that tracks the total US stock market. Also, I will oftentimes get quite a few comments that say, yeah man, that's great, I use VTI to get that same 10% return and track the market. So what I wanted to do today was look at these two different funds from Vanguard, be it VTSAX, their index fund as a mutual fund, and VTI, their index fund as an ETF. They share a ton of similarities. They are both total market investments where you make one trade or one buy or whatever, and you purchase a portion of every single stock on the US market. They both seek to track the performance of the CRSP Total Market Index, and that is their latest metric that they're using to track the total market. Before that, they've used two other different ones that I can't remember off the top of my head. Both of these funds are very low cost and very easy to use, and there is absolutely no transaction fee to buy or sell these funds if you go through Vanguard's website. And that's, I highly recommend that if you're looking at these funds or anything else offered by Vanguard, that you just trade them directly through Vanguard and pay no trading fees whatsoever. It really doesn't get better than that. So what are the differences between these two investments? Really, at the end of the day, when it comes down to the results, there aren't a whole lot of differences in your returns. But just to name a few, one of these, VTSAX, is a mutual fund. And that is going to be a basket of stocks that is managed, and you get one price per day. It's calculated at the end of the day, and everyone who buys and sells that fund during that day is going to get the same price. The other, VTI, is an ETF. And it is still a basket of stocks that is traded and managed, but it is traded more like a stock. Another difference is in your minimum investments. To invest in the index fund VTSAX, you have to have a minimum of $3,000 to get started. However, every trade after that only has to be a minimum of $1. So after you get your $3,000 in, it's essentially however much that you can afford to buy at any particular time. With VTI, the minimum cost of investment is the price of one share at whatever it is at the time. It's just like essentially like purchasing a stock. It can go up and down. I believe the price right now is around $197, but it will vary with time. One of the biggest differences between these two investments is that VTSAX allows you to set up automatic investments and automatic withdrawals, whereas VTI does not. So if you are looking to put this on automatic mode and you don't have to think about it hardly at all, VTSAX would be the only way that you would be able to do that, and it would be automated and you wouldn't have to think about it. Whereas with VTI, you do have to go in and make manual contributions every time that you would want to purchase, or manual withdrawals every time you wanted to sell some. With that, let's get into the actual Vanguard website and take a look at their price and performance for both of these, the fees that are assessed for the passive management of both of these, this fund and this ETF, and that way you can just get it straight from the horse's mouth, all in one spot. Let's go. All right, we're here in the Vanguard website, and the best part about this is that you don't need to be logged in or be a client or in any way, shape, or form have any business with them to view this information. It's just easily available if you just Google VTSAX or VTI or whatever other symbol that you're trying to find information on, be it with Vanguard or another institution such as Fidelity. You can easily find this information, but I'm just going to bring it to you right here, and we're going to look at the overview of VTSAX and VTI, the price and performance, and any fees or minimums, and then anything else that catches my eye that I think that you guys might be interested in hearing about. So for the Vanguard total stock market index fund Admiral shares, which is a mouthful, which is VTSAX. We'll get right into it. Again, it's a large blend, and it has an expense ratio of 0.04%. So that means that annually, for every $1,000 you have invested into this fund, they're going to charge you 40 cents for the convenience of doing that. That compares with 1 to 2% of actively managed funds, which is where these index funds really make their money as far as not charging you fees. The minimum investment for this is $3,000, as we mentioned before, and it says right here that it's available as an ETF starting at the price of 1 share. Obviously, it's made up of 100% stocks, so the risk potential is going to be there, and if you are invested in stocks mainly, you should know or do know that it can be a pretty wild ride up and down over the course of time, but in general and historically, up all the time over time. You have this chart here that shows you what the hypothetical growth of $10,000 was if you invested in December of 2010, and over the course of that time it would now be worth $36,363.62 as of December 31st, 2020. So what's that, like a 363% total return in 10 years or so? And these are the top 10 holdings right here. This is the portfolio composition as far as what sectors these are invested in. The number of stocks, 3,586, which has been pretty consistent for the amount of time that I've had it, and the total funds of $1 trillion with a T under management. If we get into the price and performance of this fund, these are historical prices. Again, like I said, you have to have a minimum of $3,000 to get into this and $1 minimum for each additional trade. For the average annual returns, for the 10-year return, I like to look at that because it's just a long-term, quick benchmark thing that I can quickly view. You're looking at 13.78% annually over 10 years, 7.82% annually since the inception of the fund, November 13th of 2000. But if you look at this right here, this 20.99% one-year return, that is insane. There's no way that it can keep that up, but I was glad that I was invested during that period of time. And you may even be saying to yourself, well, what if there's a 20.99% decrease one year? And that's very likely to happen. The thing is, with my money in right now, I got that almost 21% return, and I have that now. If we do have a 21% hole, the best thing that I can do is try to fill that hole with cash, and when it comes back up in the future, as the market always does, all of those shares and all that money will be worth even more than it was prior to that. Again, guys, I said that I said this 1,000 times, but 3,000 minimum. 0.04% expense ratio, which according to these folks compares to an average expense ratio of 0.9%. And you can see here that on the $10,000 invested over 10 years, you save $1,951 with this passive index fund versus your actively managed index fund. With that, let's go ahead and switch over to VTI, which actually you can just click right up here on the also available as ETF link there, and they will take you to the Vanguard Total Stock Market ETF, which is VTI. Again, a lot of the stuff that you're going to see on here is almost identical to VTSAX, with the notable exception is that the expense ratio as of April 28th to 2020 is 0.03%. So it's actually 30 cents per thousand with the ETF. I don't really know why it's any different, but from my point of view, 10 cents difference isn't really enough to even get excited about. It tracks the same the CRSP US total market. Risk potential is the same. Hypothetical growth is about the same, and on the next page we'll compare them directly. Again, same amount of stocks held, same number of total net assets for the fund, and I didn't compare these one to one, but I'm sure that the 10 largest holdings in the sector breakdown is probably exactly the same. We go to the price and performance tab. It gives us more of a stock-like look here as far as lows, highs, open, the range, and like I said, you can buy and sell this almost identical to how a stock is purchased. The performance for 10 years. Now here we have VTI is on the screen right now. We are going to add VTSAX to it and overlay it. And as you can see, it's almost identical. At the end of 10 years, we are within $3.50 or so of being identical returns from VTSAX and VTI. Again, down here in the 10-year performance, average annual returns, 13.78% annually on the 10-year. 1 year is just a smudge bit higher. I think it's 0.06% higher at 21.05%. Again, insane amounts of return that probably won't be duplicated anytime in the near future. I hope they do, but not likely. You're probably going to be looking more of the average 10% historical averages here. And then fees for this, again, should be very similar. Like I said, 0.03%. According to this, on $10,000 invested over 10 years, you're looking at $1,975 saved versus the expense ratio of similar funds. So which one is going to be right for you? Realistically, if you're not looking for automatic withdrawals and investments, it doesn't really matter. They have essentially identical performance over time as we saw on the website. But just for the purposes of conversation, if you like to trade, if you like to try to time the market, which has been proven to not be effective in that time in the market beats trying to time the market. But if you do, then VTI is your go-to. You can trade it very much like a stock, get in and out whenever you want. If you're just more of a fire and forget type of person, VTSAX is perfect. You can set up those automatic withdrawals, automatic investments, and you're just set to go. If you have less than $3,000, you're just stuck with investing only in VTI, which there's really no downside to that. But again, you have to have a minimum of $3,000 to invest in VTSAX, so that's just that's just something that you have to have. If you're not sure, invest in either. They will each return approximately the same amounts over the same time period, so it really doesn't matter. The differences of 0.03 and 0.04 in the expense ratios really isn't that big of a deal, but if that is your deciding factor, then hey, VTI is for you. So I hope that this gives you some clarity on what the differences are between Vanguard's VTSAX and VTI investments. As usual, I like to tell people that other institutions have very similar investments to this. So if you're already with Fidelity, go with Fidelity. If you're with Schwab or someone else, you may want to stick with those people. If you are looking to get into investing for the first time, I like Vanguard. It's always been a very easy platform to use. Their app is very easy to use. Trades for their investments, their ETFs, their mutual funds or index funds are free through their website. So that's just something to think about. Guys, if you like this video, if you got some value from it, be sure to give me a thumbs up. That really helps this video. If you haven't subscribed yet, be sure to subscribe to grow your wealth, increase your success, put you on the road to financial freedom. I really appreciate you guys watching today, and I'll see you on the next one.